Welcome to Short View Trading. It's Monday 20th of March around 10 a.m. London time. And the real question is, what do you need to think about if you're a swing trader of equity index futures? If you want to go long or short S&P 500 equity index futures or indeed other index futures, what are the key factors to watch? That's what we're going to get into in this video. Well, what a week of turmoil that was, culminating over the weekend with the takeover of Credit Suisse by UBS Bank in Switzerland. But of course, over the course of last week, lots of signs of stress in the banking system and the global financial system. TED spreads, one good indicator of banking system stress, picking up sharply back towards their highs that they saw in 2022, indicative of that stress that we're seeing in banks. And then more widely, high yield corporate bond spreads in the US widening again, gapping out again on the back of all those concerns of the credit crunch, of the confidence that's leaving the banking system and the concerns that that will mean for credit conditions and the economy in general as we go forward from here. So stress clearly building in the banking system. And with that, we've seen a reassessment of monetary policy in the US. The expectations have changed dramatically, as typified by what you saw in the US 2-year bond yields. The chart we're putting up in front of you now. They were over 5% earlier this month. As of this morning, they're around 3.70, so about 130 odd basis point shift in those 2-year bond yields, and that encapsulates what's been going on in terms of the repricing of monetary policy. The market's gone from talking about a 50 bips hike at this Fed meeting this week to maybe a 25 or maybe a pause, and actually starting to price in some cuts beyond that. So a very dramatic shift in monetary policy expectations, reflecting the fact that the Fed has tightened until something's broken. And we have seen something break in the banking system in the US. 2 major regional bank failures already, and many other banks under considerable pressure, whether it's First Republic Bank, PacWest, or many others. And indeed, if you look at a chart of the regional or the Nasdaq Banks Index, which we're putting up in front of you now, making new closing lows on Friday, despite the policy response we had 10 days ago at the prior weekend with the Treasury and the Fed backstopping deposits and so on in the system. So banks under a lot of pressure, the financial system under a lot of pressure. The Eurozone banks opening much lower this morning, Monday morning, on the back of that deal and the impacts for the cocoa bonds and the impact for the wider implications for the Eurozone banking system. All of that playing out. And yet despite that, the S&P 500 seemed to find support last week and hold at its key sort of support levels of 3,800/3,850. And indeed the volatility, the VIX index spiked on Monday, made a closing high for the week and then stayed at around those levels but didn't make a new closing high. So in some aspects, markets starting to stabilise, perhaps reflecting, or no doubt reflecting, the fact that policymakers have woken up and are starting to respond. But really, what's interesting about that is markets, of course, are forward-looking. They price in the uncertainty and then the response typically comes. So in that respect, the models that we put up each and every week, we put in the daily RAG every day, are really interesting because they're forward-looking. The models look and calculate and quantify how much fear has been priced into markets, or indeed greed when they're going up in an aggressive way. And what you can see from the model we're putting in front of you now is a lot of fear has been priced in. Risk appetite is very negative, very risk averse. Markets are fearfully priced. Therefore, a lot is in the price already. Interestingly, that of course is coinciding with the fact that these markets look like they're trying to stabilize. So there may be some opportunities brewing here, but there's also a lot to worry about in terms of the banking system under considerable pressure. And it's not clear yet the policy response is sufficient enough. So to see how we're playing this each and every day, please see today's daily RAG, available to subscribers over the website. Or if you're interested in a free trial, simply click on the link below and we'll send you the daily RAG, also known as the RAG Trader, for free for 3 weeks. No credit card details required, simply your name and email address. So key events this week, not surprisingly, as always, multiple. Most importantly, I think, is watching the price action. What happens to those TED spreads? What happens to high yield corporate bond spreads? What happens to Eurozone bank debt? What's the pricing on the cocoa debt? All this kind of key price action needs to be watched closely. That's number one. But over and above that, of course, we've got the Fed, as well as the Bank of England later this week. The Fed meeting Tuesday, Wednesday, 6 p.m. announcement London time of monetary policy, with the summary of economic projections, the quarterly release of those dot plots and where they think the economy's going, added to which you have the press conference from Jerome Powell as well. Will they raise 25 or will they pause? Will they raise 25 and pause and signal a pause from there on out, or will they just pause straight off the bat? We shall find out. It is key. It is important. The signalling is important. The message in the press conference is key as well. Equally, the Bank of England later this week, another opportunity to see if a central bank is going to pause. And then finally, President Xi and Putin are meeting in Moscow today through to Wednesday, I believe it is, discussing purportedly a peace plan, but who knows exactly what. What comes out of that, I think, will be watched closely as well in terms of the way the Ukrainian war and the global geopolitics evolves from here. This is a critical meeting between two major heads of state. So that's it from us. That's your morning market here for Monday, 20th of March. Thank you for listening. Please do subscribe to these videos on YouTube. Simply click on the subscribe button or follow us on LinkedIn, Twitter and or Facebook. Thank you for listening. Stay safe. Trade well.